What is going on, guys? Sam Aker here, coming to you with a little bit of an impromptu SIRC live stream. Very excited. I actually didn't think they'd get earnings out today, but they ended up doing it. So I guess we're going to be talking about earnings. And I originally wanted to do this live stream just to talk about the PR, as you'll see from the thumbnail of this, which in my thick skull, a PR like that probably means they're going to release earnings the same day. But what are you going to do? So I think what I wanted to do, also, I don't know if anyone's joined yet. Sound off if you're here. Love to hear from anyone. Obviously, drop any questions as this stream goes on. Love your questions, comments, whatever. But I think what I wanted to do was, and I'm sorry, I'm looking off to the side here because I have my notes and everything, and my broadcasting stuff. What I wanted to do was just talk through the PR first, just to give you a little flair, and then we can start running through earnings. I'll say this now, I'll say it again. I haven't had a chance to, I've read the earnings, but I haven't had a chance to like sit there and like really analyze a lot of things. Some people have sent me some stuff and I've been reading the Discord a bit, but I haven't like gotten everything yet. So I will plan on doing another video, hopefully, to go into a little more detail on some things that I saw, because there's some things I want to dig into a little bit more and I just don't have time. Had to eat dinner, right? So what I'm hoping is it's at least helpful for you for now, that can tide you over. And then when I get a real, I'll do video, maybe I'll just do another live stream. I don't know. We can talk through some more detailed stuff, but there will be more. So with that, let me flip over to... Okay, let's start PR. I'll go through this one pretty quick because I'm guessing most people in here are probably really want me to go through the filing. But I thought this PR was actually, I wouldn't say it was good, but it gave a lot of info. So I'll just run through it pretty quickly here. Yeah, status of the merger. I mean, this thing, it sounds like it's not coming anytime soon. Tribeca is still in the process of raising funds and identifying companies to include in the uplist. Sounds like they're exactly where they were when this thing got announced, like 6 months ago or whenever, 5 months ago. I'm starting to think it's not going to happen. That's just me, unless we see some improving capital conditions. But I don't know how long that would, like if that could really turn this thing around that quickly. I'll go out a little spicy take here. I think the company actually said some very dubious things in this PR, that I'm honestly surprised if they have legal look at these things. I'm actually kind of surprised they allowed them to say. Like first off, they say SIRC valuation increases each day. According to who? Right? I mean, if we're looking at share price, nothing about that tells me that their market cap, or at least their share price, is going up every day, right? That's a very interesting thing that they said this. So anyway, that's the merger. Apparently not. That's far off and maybe not happening. We'll see. Callaway, yeah, I mean, it's the same story. They're just trying to get access to the property. They talk about the Lordsburg project and the $370 million pipeline. Again, they're saying it's an active project. I mean, there's really not too much new here other than they didn't say that it's done. So apparently this pipeline is still theoretically there, but I'm not holding my breath. Let's see. Publishing Q3 financials. Oh, this is why it screwed me up. They said we will be publishing Q3 financials next week. So clearly they drafted this last week and then didn't release it until today. I was like, are they going to be late or whatever? And investors will see the positive trend has continued. That's debatable. We'll get to that in the filing. I anticipate being cash flow positive in Q4 and starting to generate effective operating profit in Q1 2024. So they're like halfway through Q4. Didn't look like they were real close to being cash flow positive in Q3, so we'll see. This is a little more, I think this was better written than some of the other comment above about the valuation increases each day. The current 3A10, that's a thing with continuation capital. We'll talk about that. And the Pablo settlement will have a dilutive effect on the share price. I think it already has. I'm pretty sure they've already started shooting. I guess this is, the 3A10 probably hasn't as much yet, but the Pablo thing I think already has. We're working with resources. Blah, blah, blah. I do not see the need for a significant additional dilution and expect share price to start to recover early next year. That's a bold statement. When we look at the financials, we'll maybe stick a fork in this one for now or whatever. Put a pin in this one for now. We'll get back to it. The best way I can impact share price is to shore up the balance sheet, yes, by retiring debt and focusing on profitable revenue growth. Yeah, I mean that's what you do, right? Remember this by focusing on profitable revenue growth point, because we'll get to that. There's something about that I think some people already brought up. It's the filing of SIRC's third Form 10. Given upfront recurring expenses, blah, blah, blah. Why do you find this better use of borrowed money than operational improvements focused on positive cash flow? So they want to file their Form 10 early Q1. My guess is they want to have, I guess it would be, I think they'll probably want to have full 2022 financials done, or sorry, God, what year is it? 2023 financials done by then. Maybe like release the 10K and then file the Form 10. They want to become fully reporting. Much of the work we've been doing for their initiatives are parallel to the efforts we need to file an S1 or Form 10. So the actual cost to file is relatively minor. I believe becoming fully reporting opens up SIRC to institutional investors, and the more people interested in and capable of investing in SIRC, the better impact it has on existing and future shareholders. I mean, they were SEC reporting for a little while. It didn't really help them that much, but I don't know if they think, at least in this case, the company is like a tenth of the size it was back when they were trying to become fully SEC reporting. And then obviously we all know that it really didn't work, and the SEC sent all these comments and they just didn't amend any of their filings. And as long as it doesn't cost a lot of money, I guess they can do it. But I mean, I think maybe they're being a little generous with them getting institutional investors. So, storage, battery storage. I'll let you guys read about this. This is more on the business side. God blessed they brought up Arbiter. Ooh, I just felt my blood pressure raise reading that. So SIRC is interested in having the initial investment interest returned to us. As we move forward, we'll review any lending opportunity with Arbiter Bank, just like we would with any other opportunity. If it's competitively priced, we would secure funding. Yeah. I do not believe that the bank, once operational, will have the same lending capability as was originally predicted based on the dramatic change in interest rates and the tightening of availability of credit through traditional lending sources. So if the cynic in me is saying, when he says, I do not believe that the bank, once operational, will have the same lending capability it was originally predicted, I would say that the lending capability is, there is no lending capability. You know my thoughts on Arbiter. I will say, I think they have to say things like this, like is interested in having their initial investment interest returned to us. Like they can't just be like, oh, well, the money's gone. Right? Like they can't just act like they're not going to get it back or something. So sorry, I think I might have dropped for a second there. Apologies. Anyway, they have to like show face that they're going to try and get the money back and at least hold them to the contract. So again, I just don't expect don't expect a single dime to come back to the company out of this idiotic venture. Again, this next question is about accessible market, things like that. Sorry, having a jump around here. Yeah, you can read this yourself. Why have investors not gotten a more in-depth business plan from SIRC? It needs to be more transparent about their way forward and their intentions. I get what they're saying. They're basically saying that like most public companies don't really do this, and I get it. Like they're kind of a small company, and they're way more reliant on retail shareholders than a lot of other ones. So I don't know, but I did want to point out a couple things in here. Let me just find it. Trying to be as transparent as possible. I also believe that my predecessor was jumping the gun on announcements to the market. Having a lending term sheet is not the same as having an approved lending instrument. You guys know there were some legendary PRs from earlier this year about having funding and saying it was ready, and it never happened. Well, there you go. Throwing some shade. Having a development agreement with a third party is not the same thing as having a signed contract with SIRC and an end user. I have a more conservative approach to announcing what is approved and signed as opposed to anticipated. Thank you. Yes, I've been a little harsher on the management team, but I think this is good. Yeah, this is just about in more about visibility and everything. So you read this PR and you're like, okay, well, said some dubious things, but I mean, it's not too bad, right? But then you get to the quarterly filing, which I can talk about now. Let me just jump in here real quick. My side. Yeah, Sax Wizard, what's up, man? I will not give it to you soft. This filing was not good. I'll just lead off with that. So reminder, if you missed the beginning of the stream, I have not had a chance to review this thing in like super detail. And I have read it though. I think I was able to get through it at least once, one and a half times maybe. Take a few notes, but bear with me here. Drop anything in the chat if there's something you want me to cover specifically. I'm gonna have to run this back at some point and do maybe another video or live to go through some more detail and point out some more, like kind of like sum up my main points. So what I'll do is I have it open now. So I think what we can do is just roll through this. And then again, stop me if there's anything you want me to spend some more time on or talk about. Yeah, as of September 30, they're at 1.5 billion shares. Yowza. We are already at, what, almost 2 billion. The AS was 3, about to be 4. It might already be 4. This is like as of 3 weeks ago, which I'm surprised this hasn't been updated yet. So I'll just fly through some of these. Maybe I'll get to issuances later. I mean, there's a ton of them in here, right? Yeah, you can see one thing I did want to point out off the bat is I feel like I wonder if a lot of these people are... No, they couldn't have been part of the Jason Newby like all the salespeople who are offered things for the commissions they haven't been paid. But this is too soon. This is September 22nd, so I don't think it could be. I did see a Massey in here. I don't know if you guys in the Discord know if there's still a Massey at that works at SIRC, or maybe this was deferred compensation. I don't know. Just seeing the last name made my blood boil a little bit. Either way, it wasn't very much money, but still. I think what we can do is maybe we'll just roll right into the financials, and then we can talk about some of the specific notes and everything. So they were profitable from ops, but revenue is way down, right? I have Q2 open here, and I can flip back to it occasionally, but if we're just talking quarter over quarter, 8 million down to 4.8. Yikes. Pretty thin gross margins. They have a huge negative salaries and wages, which I don't quite understand that. It must have been compensation that was accrued and then not paid. They were accruing compensation and into Q. I don't know. It didn't make a ton of sense to me. I don't know. Any accountants out there you want to take a stab at that one, but I'm trying to. I was trying to think off the top of my head what that could be, and it just looks weird. It's the only reason they're profitable from ops, right? So that's why I kind of focused in on it. And it looks like in general they're still cutting costs quite a bit. Like professional fees are way down. G&A is down, right? So they're profitable from ops, but once you hit interest expense, that's where it all kind of falls apart. So not good, right? Net loss 730K on 4 million in 4.8 million in revenue. Not good. I was hoping for them to be making a little more progress than this. I guess if you want to be real technical about it, their margins did improve at a operating level, but I can't say that's a good thing when your revenue drops by like half quarter over quarter. And we'll get to this more because there's some more bad news on this coming up. We can go cash flow maybe. This is 9 months looking back. So for the 9 months looking back, right, they had 12 million in profit. Most of it's from that debt forgiveness with Granite, right? This 13 million. So yeah, I mean, things like stock comp and everything are in here, and whatever, you guys know. Hopefully you guys know how to read one of these by now, but essentially what's happening is they were cash flow negative for the last 9 months by $2.6 million, right? Just from operating the business. And if we flip over to Q2, this is Q2 I have open now. Their deficit for the 6-month period was 1.4 million. And now it's negative 2.6 for the 9-month period. Some basic algebra will tell you that they were quite cash flow negative in Q3. So they weren't even close. I had been thinking to myself I didn't think they would be there, but I was hoping they made progress. This is not progress. I don't know why this PR made it sound like they were making so much progress, because Q3 did not show it. And I know we're already looking back to September, but like, my God, this was pretty ugly. Like, nothing about any of this made me feel better about the company. And you can just see how they're financing everything through new debt, new convertible debt. Some of this is like Brett Rosen notes and things like convertible notes and stuff like that. So, and trying to refinance, but we'll get to that. Balance sheet wise, so from they still have quite a big liability chunk in here. They're still very insolvent, right? I mean, once you take out WIP receivables and notes receivable, this is Arbiter. So you could probably just delete this and put a big 0 here in my mind. I mean, they're still very insolvent. Their financial position has not really improved that much. I mean, it has, but versus Q2, which I have open here. I mean, their current liabilities were 37.5 million versus 34.9 now. So not so good. I mean, they did clear some. I think if you flip into it, they had some payables. They had some payables drop, which I guess is something. Some of their convertible notes are now lower now from 10.6 to 9.3. Those were the two main things. So they are reducing debt, but I was kind of hoping for all that dilution we'd see a bit more. But a lot of the dilution has happened in the last few weeks, and we will see why. So maybe by Q4 it'll look a bit better, but we won't even see that until the 10K. Or no, sorry, I keep making it sound like they're SEC reporting. Their annual report to OTC markets will not come out, knowing them, probably until the end of November. Or sorry, end of March. Good Lord, I can't talk right now. End of March 2023. 2024. Whew, tough night. So it's going to be a while before we ever figure out how much it is. I mean, we're talking, 4.5 months, I think. And that's if they don't extend with OTC markets. So, not good. Nothing about this made me feel better, to be honest. That's high points on financials. Let's get into some of these notes, because there were a couple of things that I talked about here. If you want to read this, I won't do this now. You can see what all their dilution was. This number here is all their, you can zoom in, maybe you can see their common stock issued. Like, this is 500 million shares for conversions of debt, right? We'll see all of that. They converted, they issued shares for preferred B stock, right? We did know about that. Those are reserve, what do you call it? Held in reserve for some of Brett Rosen's notes, I think. And things like that. So you can kind of get an idea. I know it's not perfect, but you can just add up the paid in capital and everything. And you can sort of do the math on what the effective dilution share price was. I think if you just do the math and divide 2.6 million by 500 million, you get like 0.005, which kind of makes sense from where their share price was over the last quarter, right? They made pretty hefty discounts, right? And depending on when in the quarter they were issuing these or doing these conversions, but clearly a lot of things were at discounts, which if anyone thought it wasn't going to be at a discount, you were wrong. You should have known. So let's run through some of these notes, and maybe I'll take a quick sec here, look through the chat, see some people are here. What's up, Jord? Always a pleasure. Drop in revenue is wild. I wonder if California's new regs had any impact if they just aren't landing jobs. Yeah, I think California had a lot to do with it. I think they talk about it in here a bit. Yeah, he says, like, I don't see solar. It was NEM 3, right? I mean, it's just some of the regulatory issues out there. So we'll see. But yeah, I think that was probably a lot of it. Plus, their revenue is a little more real now. If you catch my drift. So don't forget about that. All right, let's just roll through the notes here. Let's see, maybe drink of water. Sorry, everyone. It's hard to talk this much sometimes. All right. Let's see. I was going to show something here. Yeah, this is them talking about how they recognize revenue. Whew. All right. I always really like that they do this still. They have their segments, right? I think this is really helpful for a company like them, even though it shows us some not so good things. If you'll recall from last quarter, what we were seeing was still nothing in commercial. Residential solar was actually earning some money. Roofing was pretty stale, right? Same with Plemco EV charging. And balance was pretty good. Supplemental was balance, I think. They might put some other stuff in there. And there might be some things missing out of these ones in terms of people. So it may have like maybe a little too much costs in these ones, but supplemental. So maybe it looks a little nicer than it is. But balance is supplemental. It's included in supplemental, I think. It must be. So what we saw, you can see really where the revenue drop was. Like solar residential has been doing horribly, right? Even roofing dropped by half from 1.9 million to 716K, right? Not good. They're profitable, but like, man, some big drops. What I was actually, one of the main things I was looking for was I wanted to see how balance was doing, because it had a really good quarter, right? 673K operating income on 110 or 1.1 million in revenue, which I don't know if some of this stuff is like one-time stuff or I don't know, but even if you look at the past 9 months, which is this, I have it blocked off here, the 9-month period, 2.6 million in revenue on 500K. And we know this solar commercial stuff was like, a lot of it was like bullshit, right? Or like it's in WIP receivables, one would think, right? Because they have not been cash flow positive yet. They had positive operating. Yeah. It's. I don't think a lot of this has been collected on cash wise, but I think a lot of this has. So you're seeing like a pretty good business here, right? So that's 500K operating income for 9 months, and this last quarter was 673, which is quite good, right? This was at Q2 is 179, or the 6 month was a loss. So I think the beginning of the year it was losses, but I'm going to jump ahead here to the end because I think a lot of people caught this too, or I think they did, or maybe I'm just imagining this, but I wanted to see what the terms were for this balance sale. So October 6th, so it was not reflected in the financials because it happened after the fiscal, the quarter ended. Company entered into an asset purchase agreement. So basically, they kept the LLC that owned Balance, but they sold like the assets, probably like the brand and any rights and stuff like that, contracts. With Strong Force Development for the sale of Balance, right? Purchase price was $1.3 million, where 500K was paid in cash and the remaining was 850K was a promissory note. Okay. So let's just, I was pretty annoyed to see that like a lot of this was actually in promissory note format and we're not given terms, right? Doesn't look like it's interest bearing and we don't know how long they have to pay it, right? Could be a year. I'm guessing it's short, like at most like 2 years or something, if that. But like, first off, purchase price aside, this company is like dying for cash, and you're telling me they're gonna like enter into like a sale with a like future payment? Like, oh my god! When I saw that, I was like, you got to be kidding me! Like, you couldn't have negotiated some other way where like you give them a little bit of a discount so you can get cash up front. Like, this company is dying for cash. I thought that was the whole point of doing this. Maybe this promissory note is like for 3 months or so. I don't know what the term is, but oh man, like, so that was the first thing. And then, okay, 1.35 million, right? We flip back up here to, let's just assume supplemental is all balance, right? 1.1 million, this is 1 quarter, right? And they were sort of like on the up, right? They'd sort of launched some new product offerings and Troy talked about it a ton earlier in the year, before he went on leave and then resigned, and bought his company back. I think he bought his company back. I'm pretty sure. He's involved in the new one. So anyway, they also missed a decimal point here, and it really is bugging me. Is 0.4, right? 1 quarter was 673K in operating income, right? I'd like to say I have some experience in valuing small businesses, right? Just doing some back of the napkin math here, right? Say you had 600, we'll call it 600K, right? Annualize it. We'll be nice and say that it's earn the same thing every time. Maybe we'll be even a little nicer and say we'll annualize it based on I don't know. We'll say maybe they only were going to earn 1.8 million. That way they just had a really good 1 quarter. No matter how you cut it, I'm not seeing how selling this thing at an earnings multiple of less than 1 is a good idea. I just don't understand it. If it's 1.8 million in earnings, I have that backwards. It's so weird doing this as a negative, right? So I don't understand the value. I get it's a small business, and these things tend to not have very good multiples. Usually they're low, right? Really small business, not a lot of growth prospects, 3 times earnings, right? 2, 3, 4 times earnings. But this is a growing business. This is pretty good, right? It can operate standalone. It was before. It's not just something that has to be part of SIRC. And they sell for 1.35 million. I was like, oh my God, when I saw that value on it. Maybe there's something I don't know, and maybe this looks better than it really is, what the new owners are getting, or Troy or whatever is getting. But it seemed, I'm going to be a little hyperbolic here. This seemed like a really bad idea. Their other business lines are doing awfully, right? They're at the core of it. They're a solar provider. It's in the name, right? They can't even do that, right? They're losing tons of money on it. They're actually making money doing roofing, but their revenue is dropping like crazy. And EV charging is still somewhat in its infancy, right? I actually didn't really talk about that. EV charging actually declined. Again, these are one of these things where I haven't been able to take a ton of detailed notes. Balance was so much of this, and then they sold it for nothing. I was like, are you kidding me? Oh my God, this one was tough. This is probably the worst part of this filing. And there's a lot of bad stuff in this filing, but this was pretty bad. I'm trying to find some positives here, but this was bad. Unless they know something I don't about this business, and just using these figures and even the 9-month figures is bad. Say we even use 9 months, right? Which is really bad, because in Q1, I don't think balance was really what balance is now, right? Even if you annualize at 500K, say you do really simple, just say it's sick. Wow, it's a really devious number there. Even just selling this business at a 2x earnings is incredibly low, right? Even for a small business, that's pretty low in my opinion. And I just don't understand it. I really hope they give us more info on this, or someone explains this to me better. I saw a lot of other people complaining about this, so I'm probably not the only one, but this was tough. This one was probably made me the most fired up. So, not good. Open question on whether Troy will pay the note. After all, SIRC never paid Troy on the note. SIRC issued Troy when Dave bought Balance years ago. You're right. Yes, that's true. I actually didn't bring that up. They still owed 400K or something to Troy that they never paid. So maybe part of this is them forgiving 400K. So maybe I'm making it look like it was less than that. But yeah, I guess the open question is, will he pay the note? I don't know. I can't. I can't attest to his credit worthiness personally, but one would hope so. For SIRC's sake, God, I hope he does. Had to sell to him, presumably. Also, bribe Troy to give a preferred A, though Troy returning the preferred A wasn't in subsequent events. That's a great point too. See, thank you for bringing this up. I did not notice. You're right that preferred A was returned to the company. You should have seen it in subsequent events. You're right. You really don't. You just see that he resigned. And yeah, one would think he would return it. He wasn't. He was probably still listed up above, wasn't he? Or did they just like low key take him off? I don't think they did. Yeah, I thought I remembered seeing him on here. That doesn't make any sense. You're right. Totally agree. So I think they need to. They don't have to explain it to me, but I'd really love to hear the explanation around this whole this whole transaction and subsequent valuations and whatnot. So let me run through the rest of this. That I wanted to focus on that one because that was a really big one that bugged me. At this point, I am so like, it's like getting punched like 100 times, then someone like just punches you 2 more times. You just like don't even think about it. I like don't even really look too much anymore at the potentially converted stock here, right? Like they have the Series B held in collateral with Brett Rosen, and there's and we have other convertible notes and stuff that convert into more shares. But I'm like, as of November 1st, there were 1.9 billion. As we find out later, there was actually more. There's way more shares outstanding than that right now. So at this point, I'm just like so jaded. I'm just like whatever when it comes to this stuff. Let's see, going concern, and you bet you're tooting to have issues with substantial doubt. Yeah, I mean, someone else brought this up that they just keep rolling forward the arbiter, like repayment is expected to be forthcoming in the fourth quarter of 2023. I don't remember what they said in. Oh yeah, they said third quarter in Q2. So my guess is they just change this every time and just keep going with it, right? Should be in Q4, right? Since Bounce was sold in Q4. Yeah, exactly. We'll be able to see some of the accounting around it and how they account for it. But maybe we'll see a forgiveness of the payable. I assume we will, or the loan or whatever. Yeah, I guess you'd payable, whatever that was still owed to them, because I think it's still in here, right? Yeah. $409K for the acquisition of Balance Authority. Won't be talking about CYBL on this live. This is SIRC time. Did they file today or something? I'm gonna stick with SIRC for now. You'll hear from me about CYBL soon if they did actually file. Yeah, okay. Restatement, we all saw this before. Yeah, whatever. Convertible notes, again, it's really the same story. It's down. The balance is down, but 10.6 versus 9.3. Actually, I think a big chunk of this was actually RB Capital. This was something I wanted to look at, and I don't know if I'm going to spend the time on it now, but $1 million of his convertible note is now gone, right? This 3.192 versus 4.1 at Q2. So I need to look at that some more. and figure out what his terms were on the conversion, because you would think, and I don't know if this was a preferred B conversion or not. It would be in here somewhere, you would think. In Q. Oh, because I'm looking at the wrong quarter. I was like, why does it not go? There we go. $100 million at 0.003. That's not enough, right? Sorry, I don't know if you guys, this is where you want me to spend my time. 300K. It would have had to be Q3. Yeah, preferred B. Maybe it was preferred B, maybe it was some common. I mean, there's common here as well. We sort of knew about these, though. Just flip over really quick to... You can see preferred stock activity. Sorry, I'm going down a little bit of a rabbit hole. Yeah, reserved to secure an existing line of credit. I'm not sure that was... If it's issued as a reserve, you wouldn't think it would remove the principal from being owed. It's just reserved. Anyway, I digress. Convertible notes are down a bit. A little bit. You'll see that most of their dilution was actually not really for removing debt. Yeah. Derivative liabilities, whatever. Notes payable. So I do like to look through here for the snapshot to just see how crappy their debt looks. It looks like most of the obnoxious debt is gone. Like the ones, I wonder if a lot of them are around at Q2. I can't remember. It's like the ones with like daily payments and stuff like that. Yeah, not really. It wasn't actually quite as bad at Q2 either. Yeah. Anyway. So it looks a bit cleaner, but not really the reduction I was hoping for all the dilution that was happening, right? I always get a chuckle, this large investment group LLC. It reminds me of, like, if you guys have seen Parks and Rec, like when Ron Swanson starts the construction company in the last season or whatever, it's called like Very Good Construction or something stupid like that. Just reminds me of that. Yeah, you can read this, but it just kind of goes through the loans they've gotten and the ones they've repaid. So over the last 9 months, they talk about Granite. Yeah, we'll get to this. You can see all their common stock activity. This is probably where I was hoping to get a little more detail on shares issued, right? And what they were for. I didn't actually realize Granite had any notes left by August 17th. 118 million shares. Sorry, this is how I have to do this because I haven't read the whole thing in detail yet. Someone correct me if I'm wrong here. If August, so it would have been during the quarter. No. Yeah, it would have been after the quarter. So it should be in here. Unless it was like super short term. RB Capital Mammoth. Was it listed in? Was it not convertible and they just... Hold on, I'm like really confused now where that note even came from. It's like 100 million shares. Did they just have a straight note payable to him? Small business on deck. vehicle, PPP, line of credit, Granite, 127K. C note 12. Was this it? For debt value at 481K. Where the fuck is this debt? I don't understand. This is strange. This is something that I need to look at more. Maybe I'm missing something, but I don't understand where he had 481K of debt. It should have been on the balance sheet somewhere at Q2, and it's not. That's not good. I don't understand. And they kept touting about how like everything was going to be done with him, like in this whole thing. Yeah, all canceled except for 127K in principal. So where are we getting like 500K in debt from? I don't understand what's happening here. Unless they got more loans from him, and like I just don't get it. That's not good. Debt. This is continuation capital, so they're doing their they call it their court ordered debt settlements. I think they're sort of like maybe like a debt consolidator or something. I don't know. They're helping them pay off their debt through conversions. They probably I don't know. It is what it is. They're at hefty discounts though. Like if you take like August 22nd, 0.00338. On August 22nd, we were trading at what? Actually, like you're not too bad of a discount. We had a big dip there. Anyway. They would have made a lot of money if they if they converted at that price and then sold it like the next week. Wow. Anyway, I digress. Actually, it probably wasn't that much money, 50K or something, but yeah, you can just see all the work this company has been doing for them to clear out debt. But this is like really small debt, right? 58K, 60K. It's like they're almost taking like small chunks of principal or something and doing it that way. I don't know. I was hoping for more, personally. Yeah, here's the RB Capital, 100,000 shares for debt valued at 300K. I haven't done enough to figure out where that principal came from, but 0.0, that's another big one, 0.003, September 29th. Yeah, I mean, it's a discount for sure, 60%, something like that. Or 60% of the price, 40% discount, 50% discount. I don't know. Whatever. At this point, I'm so numb to seeing dilution from them that I like can't even. It's hard for me to get worked up by it. What was the dilution for the question mark? I'm not sure what the question is there. This is absolutely lost porn. Just bought porn up premium. Yeah. I mean, either way, you would have paid money and not gotten it back. At least for that, you would have gotten some better entertainment than listening to me. Tony supposedly gave up 113 million in debt, then suddenly gets 182 million shares. Yeah, I'm still confused by that. I'm glad I'm not the only one who's confused. Wanted to let us audit the Q before posting it publicly, likely some accounting error. She does not let anyone look at this, nor should she. This is the company's responsibility to look at. Anyway, you can see the dilution during the quarter here, and just see that it was for rinky-dink things. So, sorry, that was last year. So, anyway, preferred. Yeah, we already talked about preferred a bit. This is Dave. Yeah, you're right. Yeah, Dave's going out. And this is to Wanda, Troy, and Brad. preferred B. This is the Brett Rosen preferred B. Yeah, okay. Non-controlling interest, whatever. Acquisitions. I'm surprised they still keep. I mean, this is like you can't even read this, which is kind of ironic because like a lot of these subsidiaries like don't even exist anymore. I don't think in practice. Maybe they own the LLCs, but they're not like doing anything. Like their commercial resident, like their commercial solar, they've had no revenue for 2 quarters. So one would think that USA Solar Network is not actually doing anything. It's really blurry there, but that's what that says. Litigation. Okay, so this is probably the last important one I wanted to. It's not confusing. It's SIRC. I feel like someone needs to put that like on a mug or something. I just wanted to run through these pretty quickly. They're being sued for not paying their payables. I mean, that totally makes sense. It sounds like they just did someone to kind of light a fire under their asses so they can get paid. This is an old one. This is an old one. Some guy's claiming he got fired because he got COVID. I think that's what this was. Oh, no, that's the next one. Oh, unpaid work hours. I mean, how much could that possibly be? And then he was the director of HR for 30 days. And he was fired. Well, he's alleging he was fired for having COVID. Wow. Interesting. I'm not in employment law. I'll let the lawyers talk about that one. Okay, so here's where a huge chunk of the dilution was quarter over quarter. So remember at Q2, as Q2 ended, we were at how many common shares? 103 billion. Well, 1,035 million. Yeah. So if you look down at litigation, right? Oh, and at the end of this quarter, sorry, Q3, they were at, this is like the hardest to read table ever. 1.5 billion, right? This is before litigation, right? And we've already seen another 500 million just post as verified, but there's even more, right? So Pablo's case, we have now seen the terms of the Pablo case. I don't think anyone's seen this yet. The lawyer, the guy Jason on the Discord, he told me in a YouTube comment he couldn't find it. So this might be the first time we're seeing it. Pablo's given a very similar deal to what Jason Newby got in a $3.4 million convertible note, 150 million shares, and 150K in cash. This is like this is like more than double the money they got for selling balance has gone to Pablo. Or did I say that right? Yeah. You'd have to sell like 3 balances to be able to pay Pablo Diaz this settlement. It's like, oh my God, like this is brutal. Like, so I just said all this really bad stuff, or went through all these really negative things I saw on this filing up above. And now I didn't even get to the litigation yet. Oh boy, this is not good. I mean, I talked about the newbie one a bit. Maybe I was a little more understanding, but this is like, I thought it was going to be like not as bad as the newbie case, but this is like way worse. And I was like, oh my God, as I was reading this. Again, I'm not saying like, I don't know all the details of the case or like who's owed what or whatever. But like, as just like, I am technically an investor. My position is so small, but some for fun shares. But like, this is brutal. Like this, like 3.4 million plus 150 million shares plus 150K in cash. This is almost as high as their market cap they just paid out to the guy. Like this is painful. This was probably like between like the balance sale price, their financial performance being awful, and then it's just like getting kicked in the nuts like a million times, like over and over. Oh my God. I'm not saying this is necessarily like current management's fault. It's fair to put most of the blame on the former CEO, I would think, but this is brutal, right? Like if you would have told me yesterday, like, what do you think Pablo Diaz got? I'd be like, I don't know. I would have said like this, 150 million shares in cash, not all that. Ugh. Anyway, I don't know if I want to dwell on this too long, but this is brutal, and you should be upset about this happening. I'm just reading the chat right now. Can't believe they gave that mofo shares. Unpaid work hours probably worth 100 million shares. After all, prior management still have their 100 million option shares, 30-ish days of work. And there are at least 2 more cases. What the heck? Yeah, I don't know how much these will really be. I'm not a lawyer, but these seem much less serious than breaching the contract of a acquisition, but we'll see. Anyway, just brutal, right? All of our positions are so small now. My position was always small. I can't remember the amount of shares I own. It's not much. It was small back in the day. Now it's like minuscule. Like if they did a reverse split at some point, I might have enough shares you could count on like both my hands, you know. Anyway, I'm just gonna move on from litigation. You should be really angry about this, though. The company was even put in this situation in the first place. I don't know if management had much of a leg to stand on. Like if this would have gone to court, they could have gotten banged even harder, for all I know. So I think this is really firmly in prior management, i.e. Dave Massey, for agreeing to all of these. Okay, subsequent events. So here you go. Billion shares since through November 20th, after September 30th. So over that, like 50 days, billion shares. And remember, we ended at 1.5 billion at the end of the quarter. And right now they have they're only listing 1.9 billion. So there's like another 500 million shares outstanding on top of this that it just hasn't been updated on here yet on OTC markets. Crazy. I can see why they upped the AS to 4 billion. This company is not in good shape. So you can see what they were for. They converted more debt, 779K. Legal settlements 300 million. This is the exact numbers from above, 150 plus 150. 600,000 shares for compensation. I don't know what this is for. Are people just not taking cash anymore and they're just getting paid in shares, like employees or something? I don't know. Loan modification. I assume by loan modification they mean it's not actually paid off. They just they paid shares to like increase the term or something, or change an interest rate or whatever, some terms of it. I don't know. And then we get all the info on balance, which I already talked about. And last up, the board approved the conversion process for 4.8 million in debt. And the company issues shares at the price of 35%. So this will be a big chunk, but this is also going to be a crap load of dilution. Like the market cap of the company is less than this right now. Like, so are they just going to double the amount of outstanding shares? Like, who's even going to buy that? Like, I don't even understand like how mathematically they're even able to do this. And even then, like say, so they already took out 7, let's call it 800K, plus another 4.8, 4.9 million here. So say it's another, I'll be generous and call it $6 million in debt. If we're looking at their balance sheet, that's half of their notes and convertible notes, something like that, that are due soon. Like, what? Like, I just don't understand how the math works here anymore. Like, how they can, the more I read this report, the more I just don't know how they're going to do it without a Tribeca merger. And at this point, I don't know why Tribeca wants to merge with them. Like, I mean, they should be happy they did it now and not a year ago, right? Like, I don't know. It's going to be ugly. Like, I don't understand how the math will work on this with them issuing them at such discounts to the value of the debt. I just don't understand. If they were issuing them at like very small discounts, like 90% of face value or something like that, I don't know, plus interest, I could see how the math would work. But when you're doing it at a 35% discount to market, it's toxic dilution, right? And so you are being diluted pretty hard as a shareholder. And I just don't understand how low the share price can go and people will still keep buying shares that like will be from debt conversions. I don't know. At some point you just can't do it anymore. And I know the company has pretty good liquidity and has somewhat of a buyer pool, but I am very concerned for how this company is going to make it, especially with Tribeca out there. And I know probably people at the company don't agree with me and they think they can do it, but this is the first. I was always worried about them, but this is the first one where I'm like, I don't know. I don't think they're going to, I would say, I don't want to put percents on it, but I am very concerned whether they can get this done. I don't know. That's just me. Seems like most people are pretty concerned about it too, but this is pretty bad. Like, financials are not getting better. They didn't really convert that much debt yet. They've had to do these huge legal settlements, and now they have to somehow do all these conversions, and the market has to be able to take it to transfer debt to equity, right? I just don't get it. I don't know. I'm lost. So I think I've been through all of this. You guys have anything else in the chat for me? Let me read the chat. I haven't looked in a little bit. Mark, yeah, the AS is now 4 billion. Yeah. I'm surprised this hasn't been updated for so long, but whatever. Okay, so I'm not making that up about the outstanding shares. That should be about right. Yeah. Yeah. Should have bankrupted Chapter 13 and restructured the moment Dave left. I mean, if they would have just, I'm not like a bankruptcy attorney or anything, but if I just think about mathematically, if they go into bankruptcy, I mean, there's not really going to be anything left in the company. I think it would have just folded and everyone would just sort of been maybe left with nothing. I don't know. I guess I know there's just no assets or anything like to be like for people to pick apart. Like, I don't know. I find it hard to believe that the company would have survived and common shareholders would have been left with really anything, but I don't know. Maybe you guys know more about bankruptcy court than I do, but yeah, I'm not really sure. It's bad. I actually think I got through quite a bit of what I wanted to talk about. I'm not sure I even need a second video on this. I don't know. I think I'll end there if you guys don't have anything else. This was cool. Cool to go through live with you guys. Not cool to read this report, though. I will clarify, because this was pretty bad. So, again, I'll end with, like I always say, I hope I'm wrong. Hope for everybody's sake I'm wrong. But this one was pretty ugly. I'm trying to find bright spots, and I really couldn't find any. So, I think I'm going to stop there. If you've made it this far, I should have said this earlier. Please subscribe if you have not yet. Great way to support the channel. I'm trying to hit 1,000 subs. So I know a ton of people who watch. The majority of people who watch aren't subbed, which is do your part. Support me, man. Anyway, I'll end there. Thank you very much, guys. Have a wonderful rest of your evening.